The Bancassurance, and talk about Bancassurance for a moment. Tom Gitogo is now with me. He's the chairman of the Life Committee at the Association of Kenyan Insurers. Thank you very much for coming in.
Thank you.
What is Bancassurance?
Bancassurance, as the name suggests, is selling insurance or availing insurance services through banks. It has done very well outside Kenya because traditionally, as you know, banks are better known. You sort of hear your parents talking about going to the bank when you're still young.
Insurance company.
Absolutely.
Yes.
And because banks have a better penetration, they are all over the country, then it is easier to sell insurance through them, or it makes sense to sell insurance through them.
So typically, if I walk into KCB or Barclays or Stanchart, then while I'm there depositing money in my account, they can also sell me a policy, let's say for my car or for life, something like that?
Yes, we are not yet there,
Yes.
and that is the ideal situation. That is what we would want to see, that you can get your insurance for your property, cars, as you say, and insurance for yourself. A one-stop shop for financial services.
Where is this already working?
It works very well in Europe and the US. Closer home, it works very well in South Africa. It hasn't quite picked up here yet. Part of the challenges is the legislative framework. We are in a situation where both the central bank and the insurance regulatory authority know it's a good thing, think it's a good thing, so we are working towards making this a day-to-day occurrence.
How would this be regulated? Because the regulators are different. Unlike the UK, where they have a supermarket financial services authority,
yes.
The IRA, the insurance regulatory authority, is different from the central bank.
Yeah.
And these are almost what is it called? They overlap.
That's right, yeah. Those are some of the initial challenges that we expect to find. We already encounter them, but the spirit of working together would enable this to happen. We've already seen an interest towards the common working of the CMA itself.
Yes.
KRA, IRA, the financial services and the other regulators.
Yes.
So this then will eventually lead to Bancassurance working very well. But initially it will need the cooperation of the Governor of Central Bank and the Commissioner of Insurance. And I believe they are already in discussions towards this.
How radically would the law need to change to allow something like this? Or is it a minor amendment we can quickly pass through Parliament?
As an industry,
yes.
We would want to believe that it can be done fairly easily and
right.
Quickly. At the moment, there are elements of Bancassurance. Local banks can set up an insurance agency, but multinational banks are not yet allowed to set up insurance agencies. So there are handicaps, but eventually we would want a scenario where insurance companies can work seamlessly with banks of their choice and provide insurance services to the members of the public. That is what we would want to see.
Explain this to me. We have almost 46, perhaps more banks, and
yes.
Then we have also quite a number of insurance companies. Our penetration is still somewhere less than 4%, or just slightly over 4%. Yeah. So does necessarily joining these two forces together mean we can grow this?
It's one way that we can grow the penetration of insurance, because any bank, even the smaller banks, will most likely have a wider reach countrywide than a big insurance company. So by working through or with a bank, you have a wider reach already in the countryside. And secondly, people are already familiar with banks, and therefore the concept of getting your insurance solutions from a bank are easier understood or invited by an individual than currently is the case. So the combined force would actually be one of the ways that we would see insurance penetrate countrywide.
Let me play devil's advocate. If insurance companies have been unable to sell themselves, as it were, and to bring their services to more of the public, does necessarily bringing them into a bank make it that easier? Because the insurance companies set up stands all over the place at public events, at high traffic areas, and it doesn't seem to be working.
If you take any bank, the bigger banks,
yes.
Let's say Equity Bank, for example, we know that it has over 5 million account holders.
Yes.
if you look at the insurance industry itself, we don't have that many policies. It's not a question of insurance companies being unable to sell the products and services that they have. It's got to do with other parameters such as acceptability. We have a lot of informal insurance where people come together and either pay medical bills, for example, or a harambe of sorts to get one of their friends or relatives out of a predicament.
Yes.
That is informal insurance. So insurance penetration from that argument is wide. However, we want to formalize it.
Are there any statistics available on bancassurance being a viable line of business?
Here in Kenya at the moment, the only elements of bancassurance you might find is taking out a life cover when you get an unsecured loan with your bank, so that in the case of your passing, the bank's loan is covered. Yes. So you don't get a lot of, when you buy a car, for example, through financing by the bank, you may get an insurance cover facilitated by the bank.
Yes.
But we don't have a lot of bancassurance, not in the sense that it has worked in Europe and the rest of the world. If you take the case of Asia, for example, a country like Malaysia,
yes,
about 30% of the premiums collected in the country would have come through bancassurance.
Run me very quickly through the strengths and weaknesses of this, if any.
Obviously, the strength that I have talked about is the spread, the financial muscle of banks, because they already have an elaborate infrastructure. Secondly, the acceptability of banks by the citizenry.
Yes.
And obviously, the banks have an idea of the financial needs of a customer. So this, combined with input from actuarial services of an insurance company, can come up with a very dynamic and versatile product. So those are some of the strengths that we see. Obviously, some of the weaknesses is if a bank obviously sets up an insurance agency,
right,
then for that insurance agency, competing with brokers, instead of understanding that the concept is to grow the pie, sell insurance to those people who already don't have insurance, rather than competing with banks on corporate accounts. In fact, to me, what would make a lot of sense is selling insurance to individuals,
right,
rather than to corporates, because the penetration there is, though not where it should be, is much better. So one of the weaknesses would be that. The other weakness, obviously, would be if the bank and the insurance company don't agree on an acceptable service level agreement, where then you find the customer is probably being pushed between the bank and the insurance company. But where it has worked, there are mechanisms of ensuring that that doesn't happen.
But some brokers may go out of business as a result.
They shouldn't, because the if you take the case of Kenya, for example, we just talked about the penetration at below 4% when you combine general and life insurance.
Yes.
That means ideally there's a 96% out there.
Opportunity, yes.
So if this helps reach out to the 96% penetration that is out there, then how can brokers lose? Everyone involved gets a much larger volume of business from the bigger cake that this can help us achieve.
All right, Tom Gitogo, many thanks for coming in.
No problem.
From the Association of Kenyan Insurers, and we hope this goes through.
My pleasure.
Any timelines that you're looking at?
There are some things on the ground, so hopefully this June, when the financial bill is read, there might be something coming our way. We hope.
Okay,
yeah.
Excellent. Now,